Okay, something absolutely massive is quietly shifting the global economy right under our feet. And honestly, a lot of folks haven't fully grasped the scale of it yet. We are talking about the 2026 semiconductor crisis. Look, we're facing this intense reality where AI demand is literally exploding. Chip prices are surging, and these super fragile supply chains are just buckling under the pressure. This isn't just some temporary blip. It's a massive event that's going to determine which companies dominate the future, which ones fall completely behind, and exactly where you should be positioning your investments before the real wave hits. $1 trillion. I mean, to put that into perspective, that's roughly the entire GDP of some developed nations. According to data from Reuters, global semiconductor sales are projected to hit that $1 trillion mark this year, and there's a real chance they could double again by 2035. This astronomical growth is being driven by an absolute explosion in demand for AI. But here's the catch. This incredible surge in demand, it's about to slam right into a brick wall of extremely limited supply. Okay, let's dive into this. Here's our roadmap for this explainer. We'll start with the world's silicon backbone, look at the causes of the 2026 crisis, pinpoint the sectors at highest risk, find out where the opportunities are hiding, and finally, look at how to pivot your portfolio strategically. All right, starting off with part one, the world's silicon backbone. You know, it's crazy to think about, but almost everything we rely on depends entirely on these tiny little chips. We aren't just talking about massive cloud servers or the smartphone in your pocket. We're talking electric vehicles, military tech, banking systems, even that smart fridge sitting in your kitchen updating you on your milk supply. Without them, the modern world essentially just stops. But the landscape has completely shifted recently. As Axios pointed out, since the AI boom accelerated, companies have been rushing to buy massive amounts of advanced chips. This aggressive push for data centers is the massive new driver here. AI companies are essentially swallowing up the global supply and, well, leaving everyone else scrambling for the leftovers. Which brings us to Section 2, Causes of the 2026 Crisis. So the crucial point to understand here is that this isn't just one isolated shortage. It's really a perfect storm of four converging crises colliding all at once. The AI boom is actively squeezing the supply, and at the exact same time, we're getting hit with massive geopolitical tensions, super fragile supply chains, and severe resource constraints. Let's break these down so we can really see the pressure building. And this brilliantly illustrates the problem. Think of global chip manufacturing capacity as a single pie. Right now, massive AI data center projects are competing directly with automakers and consumer tech, aggressively slicing up that pie. Those giant AI infrastructure projects, they're consuming an increasingly massive chunk of it, which means the slices left over for everyday industries are shrinking super fast. Now, beyond just supply and demand, silicon is essentially an active geopolitical battlefield. The U.S. recently imposed new tariffs and restrictions on advanced AI chips, citing national security concerns. And in response, China is aggressively pushing to build a totally independent domestic supply chain. So we're essentially watching a global chip war unfold, and it's actively fragmenting the market, driving up a ton of uncertainty for investors everywhere. And then you have to add in the intense fragility of the supply chain itself. Global manufacturing relies heavily on just a few dominant regions, specifically Taiwan and South Korea. Plus, it isn't just about the chips themselves. It's about advanced packaging and critical raw materials. Literally any disruption to the supply of helium, clean water, or specialized equipment in those specific regions could create massive bottlenecks. We're talking about a very real threat to derail global production by 2026. Moving on to Section 3, Sectors at Highest Risk. So who actually gets crushed here? Well, the industries hit hardest are going to be the ones without the infinite budgets of big tech. Take automakers, for example. Modern cars are essentially just computers on wheels now, and analysts are warning that this supply squeeze will cause severe production delays and skyrocketing costs. Everyday electronics, like your next phone or laptop, you'll probably see major price bumps there too. And smaller tech startups, they'll simply get outpriced and outbought by giants like Microsoft and Google. No contest. All right, Section 4, where opportunities are hiding. Let's move to the other side of the coin and see how this builds out, because major crises always create massive winners. This dynamic creates a stark dividing line in the market. While automotive and consumer tech are struggling and getting squeezed out, the smart money is rapidly pivoting. Capital is flowing directly into AI infrastructure, defense, and energy. These are the sectors structurally positioned to actually benefit from the exact things causing the crisis. Let's break these surging sectors down a bit. First up, AI infrastructure. Think heavy-duty GPUs and advanced cooling tech. Second, Domestic manufacturing is seeing huge government investments right now as nations race to build local factories. Third, and honestly, this is absolutely fascinating, energy and utilities. AI data centers consume a truly staggering amount of electricity, meaning the utility grids powering them are poised for massive long-term growth. And finally, cybersecurity and defense will surge as chips are increasingly treated as critical national security assets. So, what does this all mean for you? Understanding the landscape is great, but it brings up the absolutely crucial question. How do you actually position your portfolio right now, before the broader market fully reacts to this 2026 supply crunch? Which brings us to our final part, Section 5, Pivoting Your Portfolio Strategically. We've distilled this down into 5 essential steps to help you navigate the fallout. Number 1, diversify beyond big tech. 2, watch supply chain companies. 3, monitor geopolitics. 4, consider defensive assets. And 5, focus on long-term trends. Let's look at steps 1 and 2, which are all about where you hunt for growth. Right now, a lot of portfolios are heavily concentrated in a few famous mega-cap AI stocks. But think of this like a gold rush. Usually, the most reliable money wasn't made by the people desperately digging for gold. It was made by the folks selling the picks and shovels. In the semiconductor world, those picks and shovels are the equipment makers, the advanced packaging firms, the companies building specialized cooling systems, and the raw material producers. That is exactly where the hidden value lies. Now, steps 3 and 4 are about protecting your downside. Because politics and trade wars dictate so much of this sector right now, sudden tariffs or export bans can trigger extreme market volatility literally overnight. To hedge against those kinds of shocks, consider positioning part of your portfolio in defensive assets. We're talking stable dividend stocks, the utility companies powering the AI boom, healthcare, gold, or even just keeping some healthy cash reserves on hand to buy during the dips. Now, what's really interesting here is the long-term outlook. Step 5 is keeping your eyes firmly on the horizon. Despite all this short-term turbulence, the tariffs, the supply crunches, the long-term trend for semiconductors is incredibly robust. As KPMG noted, industry leaders still fully expect strong, sustained growth throughout this entire decade. The demand isn't going anywhere. The physical infrastructure just needs time to catch up. To summarize the macro picture here, chips are no longer just basic tech components inside your laptop. Semiconductors are essentially the new oil. They are the strategic, physical resource that will dictate global economic movement, artificial intelligence dominance, and overall geopolitical power. The countries and companies that secure their silicon supply, they're going to be the ones controlling the future. I'll leave you with this provocative thought to consider for your own strategy. Is this looming semiconductor crisis merely a temporary growing pain of the AI boom? Or are we witnessing the permanent beginning of a massive, fragmented global economic shift? Take a hard look at how your investments are currently positioned against this reality. Thanks for joining me for this explainer, and I look forward to exploring the next big shift with you soon.